Announcing a major deal is not the same as earning revenue from it. A strong deal engine requires qualified pursuit, competitive wins, rapid transition, disciplined ramp up, and subsequent account comparison. And Infosys developed a major repeatable conversion chain across these stages. So Infosys and revenue, the revenue comparison shows 10 billion here, although they started their career at similar pages. So both companies invested in cloud, digital engineering, consulting, artificial intelligence. The real difference was commercialization. Yes, Infosys was more effective in packaging capabilities into scalable offerings and selling them consistently across its global client base. So, over a period of time, Infosys client generating more than 100 million annually in FY26 or 16, and Wipro in FY16 or 9, but in FY26, over a period of 10 years, it was 16. However, Infosys FY26 it was 41 compared to FY16 at 14, right? So, what the matrix says, Infosys nearly tripled its 100 plus million clients from 14 to 41 over a period of 10 years. Wipro improved too, but at a lower pace, 9 to 16. Infosys also reported 88 clients above 50 million in FY26 versus about 45 for Wipro. The interpretation here is Infosys created more growth anchor able to absorb cloud, data, AI, and cost takeout programs. How many top 50 accounts grew faster than the company, and how many stalled after the acquisition or leadership change? This is the management has to answer. The growth strategies require several years to mature because Infosys benefited from greater leadership and strategically continuity, while Wipro experienced repeated changes in leadership and organizational structure and operating models. Every reset potentially interrupts account ownership and incentives on execution. So the deal engine is a chain, not a booking headline, because pursuit requires qualified and sponsored back-end pipeline. The win requires net new TCV and balanced portfolio. The transition required fast staffing, tooling, and governance. The ramp up requires milestone convert into build revenue because the reality is only the cash in the bank account. The expansion is cross sell and revenue compound the base. The key distinction here is Wipro's FY26 bookings recovery is encouraging. The proof is FY27 revenue conversion, ramp up quality, and account expansion. So Infosys in FY21 large deals is 14 plus billion. This is the evidence of repeated across cycles. Digital cloud and IT commercialization. Infosys digital revenue, if you see FY 18, 25.5%. When it comes to FY23, it is 62.2%. The capability gap was not binary. Infosys commercialized it very well. Cobalt, cloud ecosystems, and top edge AI first value framework. One Infosys across portfolio motion. So industry solutions plus large deals is the biggest advantage for the Infosys, and the difference is Infosys made the portfolio easier to sell together and maintain the existing customers repeatedly into your large account. Whereas Wipro capabilities are first tried cloud, home, and Lab 45 AI units, digital and design it, Capco. These are the major strengths capabilities of Wipro. The strong asset and uneven integration which is happened in Wipro. That commercialization test is attach rate into deal size into delivery proof into repeated purchase, not the number branded offerings. Margin alone is not explain the difference between both companies have demonstrated respectable profitability. The more important issue is growth conversion. How effectively bookings, talent, utilization, pricing, and delivery milestones ultimately pricing and delivery milestones build and recurring revenue. So CEO operating model timelines. Leadership continuity also greatest advantage here. CEO begins transformation agenda 2016 Wipro and started is but 2018 onwards Infosys maintained one CEO, Salil Parikh. Stable four pillar strategy begins there. Again, Wipro changed the CEO from 2016 to 2020, and the new CEO SMU GBL model and acquisition wave has drastically changed it. Again, in 2024, again new CEO was appointed. So here, the leadership continuity was missing. This will slow down the decision making and staffing and leadership shifts will always create a dilemma at the expansion. Business lines reorganization agenda was realigned in Wipro in 2025. So why continuity matters? Large account strategies takes years like client mapping, leadership, relationships, transition proof, renewal, and cross sell. Repeated changes can interrupt ownership, incentives, and follow through, even when each organization is individually logical. Mergers and acquisitions is one of the strategies where we can see that acquisitions can purchase capabilities and revenue, but they do not automatically create sustainable organic growth. Wipro's Capco acquisition delivered consulting scale and added 700 million per year as a revenue of acquisition at 1.12 billion of Capco, an immediate revenue growth setup. The longer term challenges was integrating that capability and cross-selling it across the wider organization. So rising purchase price. So it was announced SAP Consulting in 2022 and acquired company revenue contribution disclosed at 1 billion. Wipro's revenue pattern shows both benefit and limitations. Wipro's IT services FY21 8.14 billion. Same in FY26 11.23 billion. In FY26 10.48 billion. What happened? So the acquisitions happen over a period and strong demand increases and post-peak decline that happened in FY26. Strategic leadings. The organic growth engine still modest. Scale arrived quickly. Cross-sell and replacement revenue did not fully offset pressure. So M&A created a durable growth only when consulting opens the door and wider firm expand relationships. So execution economics and conversion. Margins alone do not explain the difference because both companies have demonstrated respectable profitability. The more important issue is the growth conversion. How effectively bookings, talent, utilization, pricing, and delivery milestones ultimately become billed and recurring revenue. So, the Wipro is trying at its best, but bookings not become a revenue. The start date and transition speed are very important. Ramp downs is legacy in legacy accounts, scope leakage and milestones, pricing utilization and some contractors cost at overstated, and renewal plus cross sell after 1 year. So Infosys larger margins and Infosys usually operate at 21% adjusted operating margin, whereas Wipro at 17.2% IT services. The net profit of Infosys is 3.31 billion, whereas Wipro 1.47 billion, where 2.4x profit pool has Infosys. The large deal bookings 14.9 billion TCV of Infosys was there, whereas Wipro at 7.8 billion large deals. So the strongest pipeline and conversion difference you can clearly see in Infosys. At the same time, that lead Infosys to 2x the scale. So Infosys larger margin and profit pool, funded talent, AI, sales, and marketing while preserving resilience. Wipro improved margins, but revenue conversion, the contraction, shows that efficiency alone cannot replace the growth. So this is the major difference and how Infosys created the force into a flywheel. These forces reinforced one another at Infosys. Stable strategies support a stronger offerings. Stronger offerings won large deals. Successful delivery built customer trust. Trust expanded strategic accounts, and resulting cash flow funded further investments. This is how a growth the flywheel compounds. So strategy, the stable strategy, digital core, rescale, and localization as the priority. And integrated offers, Cobalt, Tab Job, industry solutions sold together. And large deal transformation, efficiency mandates create scale. So that is the delivery proof. Execution deepens trust and renewals. And account expansion, 100 million clients cohort grow. Compounding core here is more trust, bigger mandates, and more proof. That reinvestment margin and cash fund talent, IP, and sales. Where Wipro's flywheel leaked growth. Wipro possessed strong talent, respected customers, and valuable acquired capabilities. However, growth leaked between capability and commercialization, between bookings and realized revenue, and between acquired consulting strength and enterprise-wide cross-selling. This is more an execution system problem than a capability shortage because it has the capability of design it, Capco, full stride, Campbells entered the system. Less of them emerged as sustained organic revenue, market opportunity, cloud transformation, cost takeout, AI bookings. 16.4 billion total, 7.8 billion lot in FY26. So sustained growth is 10.48 billion FY26 at 1.6% constant growth. The leakage here is cross sell. Acquired consulting did not consistently pull through the whole portfolio. The leakage number two is continuity. CEO and organization changes disrupted ownership and incentives. The leakage number three of Wipro is ramp down replacement. New wins did not offset client contractions quickly enough. The fourth leakage here is deal conversion. Bookings recovery had not yet become the FY26 revenue growth. The Diagnosis here is execution system weaknesses, not an absence of talent, technology, or market access. Comparison scorecard. This scorecard brings the evidence together. Infosys established advantages in compounding growth, strategic clients, expansion, portfolio commercialization, and continuity. Wipro remained competitive in capabilities and deal wins, but those strengths did not convert into equally durable revenue growth. Infosys pattern 7.8% CAGR, whereas Wipro 3.6%. The growth consequence here is 4.2 points compounding advantage for the Infosys. The milestones 100 plus clients are 41 in Infosys, Wipro at 16. Large deal engine 14 plus billion converted into 14.9 billion FY26. 7.8 billion in Wipro. Digital commercialization, Infosys has a Cobalt, Topaz, one Infosys. Wipro has strong brands and acquired assets. Leadership continuity, Salil Parekh from 2018 onwards, whereas CEO, there are three CEOs in Wipro change over a period. M&A acquisition growth quality, selective capability tucking, then Infosys, whereas in Wipro, Capco and rising lab scale jump. So Wipro speak less durable. Whereas FY26 operating margin Infosys at 21%, whereas IT services Wipro at 17.2%. So for last 3 years, revenue growth was 10.7% in Infosys in spite of pandemic adjustments, etc. Whereas Wipro it is negative 6.7%. The difference is really resilient after demand peak. So that the momentum was realized growth over a period. So comparison scorecard and current performance diagnostic. The latest results show that the contracts clearly. Infosys entered the new financial year with a revenue milestone of 20 billion and positive constant currency growth, and Wipro reported approximately 10.4 billion in IT services revenue. So we must separate facts from interpretation. The public financial information provides that growth rates, large client development, revenue resilience differ. It strongly suggests difference in portfolio, commercialization, and execution, right? So the revenue Q4 5 billion versus whereas we brought 2.6 billion. The growth rate in Q4 4.1%, Q4 year-on-year growth at input 0.2% negative. Operating margin at 20.9% in Q4 Infosys, whereas Wipro at 17.3%. Large deal wins in Infosys 3.2% billion and Q4 large deal bookings Wipro 1.4%, 1.4 billion. The signals that Infosys entered FY27 with the revenue growth already visible. Wipro entered the improving bookings but still negative FY26 constant currency revenue, making transition and ramp up the decision test. What the evidence proves? We must separate facts from interpretations. Public financial information proves the growth rates, large client developments, revenue resilience different. They strongly say the difference in portfolio commercialization and execution. And, but internal account level data would be required to establish a single definitive cause. So, observed backs here is CAGR has the difference and the large deals has a difference and Wipro capabilities and Infosys capabilities are different and acquisitions at organic growth level shows the difference. So revenue of Wipro fell after FY23 and acquisition destroyed value. Wipro changed CEOs and structures more often, and Wipro FY26 bookings rose while revenue fell. So conversion timing is the key forward test. So the bottom line, the most defensible explanation is a commercialization and execution gap across multiple reinforcing forces. A six-move strategy for Wipro. The analysis should not stop with the diagnosis. Wipro can improve its trajectory by making its top account the primary unit of growth, strengthening booking to revenue conversion, using the Capco as a cross-selling gateway, building repeatable intellectual property, and maintaining strategic continuity. Make top 50 accounts the unit of growth. Convert bookings with a control tower. Make Capco the front door. Attach cloud engineering, cyber operations to consulting lead transformations. Named executive sponsor and 3 years wallet share plan and quarterly expansion targets. Simplify offers into industry plays. So fewer horizontal brand and more outcome-led propositions with the reference architectures. Protect strategic continuity. Hold account ownership, incentives, operating model stable through FY27 and 28. Reinvest productivity into growth. Use AI and delivery savings to fund sales, SMEs, solution IP, transition excellence. First 90 days, top 50 accounts, booking control towers, Capco cross-selling are the three primary agendas to makeover. The management dashboard revenue is lagging indicator. It tells management what has already happened to predict future growth. Leaders must monitor net new deal value, transition delays, ramp up achievement, top account expansion, consulting attach rates, recurring revenue mix, and reinvested in growth. So, whether it is a monthly, weekly, quarterly, half yearly, have to do revenue at employee level and margin to growth investment and 50 or 100 million large clients adding into the accounts and top 50 account growth, 90-day road attainment. So logging revenue should be reviewed together with the leading pipeline transition and account expansion matrix. So year by year revenue table. This table provides the complete evidence behind the story. It shows when Infosys overtook Wipro, how the gap developed and how annual differences accumulated. The lesson is that business leadership is created through repeated annual execution, not through one exceptional quarter. So finally, Infosys growth rates are constant. There is no decline in last 10 years year on year. When it was started FY16, 9.5 billion revenue reached to 20.158 billion revenue in FY26, whereas Wipro started in FY16 at 7.346 billion. By end of FY26, it was at 10.478 billion. So the revenue gap here is 9.6, whereas in FY16 it was 2.15 billion. So Infosys year-on-year growth was at 4.6% FY26, whereas last 3 years there is a negative growth in Wipro. So methodology and one important qualification must be understood. The analysis compares Infosys' consolidated revenue with Wipro's disclosed IT services revenue. So the business perimeters are not perfectly identical. Currency movements, acquisitions, and reporting clarifications can also affect the annual comparison. So for last 10 years data, annual reports data, public promise data, the publications we have considered here and deal measures Infosys TCV and Wipro bookings are not assumed to be perfectly identical definitions and used directionally. The margin Infosys at 21% is adjusted and reported was 20.3%, whereas Wipro it is 17.2%. So the core calculation here is CAGR and revenue growth. So both are at constantly growing stage in Wipro compared to in Infosys compared to Wipro. So the final conclusion is simple. Infosys did not win through one major acquisition or one technology bet or one exceptional leader. It compounded severely reinforcing forces more consistently than Wipro. Wipro challenge is not the absence of capability. It's a challenge is converting capability, bookings and acquisitions into larger accounts, recurring revenue and sustained organic growth. That is the real difference between possessing business capabilities and building a business growth engine. If you found this analysis useful, just go in deep dive. Which of these six forces created the biggest gap difference between Infosys and Wipro? Comment here. Is it leadership continuity, strategic account mining, portfolio strength, acquisitions, or deal conversion? Right. So the evidence shows CAGR growth and the added large accounts and commercialization execution gap and not a capability wide. So the test for Wipro is convert FY26 bookings into FY27 revenue and larger accounts. Which of six forces is the primary bottleneck and what evidence change your view? Comment below. Thank you for watching.